I think Jay Powell and the Fed have done an excellent job getting back on track. Once they realized that inflation wasn't transitory and they had to get serious about it, I think they're doing all the right things, and I have a lot of confidence that a year from now rates will be significantly higher. We haven't gone into a recession. We've really been able to balance everything in a very, very effective way.
And are you confident that, say, within a year from now, the U.S. will still be a better place to invest than overseas?
I'm very bullish on America. You know, as Warren Buffett always says, we have the greatest system in the world.
All right. John, always great to talk to you. John Rogers, of course, the co-founder of Ariel Investments. Back to you in New York.
All right. Of course, Bloomberg's TV, Romain Bostic there with John Rogers, as he said, founder, chairman, co-CEO, and CIO of Ariel Investments. Bullish on America, he said, joining us from the Bloomberg News Bureau in Chicago. Tim.
A big thank you to Romain Bostic for that one. Hey, let's get a quick check on today's trade and top business stories. Here's Charlie Bell.
All right, I thank you very much, Tim. Here's what's going on. 35 minutes to go ahead of the closing bell. Right now, we're looking at a mixed market. Dow Jones Industrial Average higher right now by 53. That is a gain of 0.1%. We've got the S&P lower by 6, a drop right now of 0.1%, with the NASDAQ Composite Index down 61, a decline of 0.4%. 10-year 4.09% with a 2-year 4.52%. Spot gold up 0.2%, 21.83 the ounce, and West Texas Intermediate crude up 0.2%, 78.16 a barrel. Bitcoin pushing higher up 4.5%. Bitcoin 72,572 right now on Bitcoin. Coming up after the close of trading, we'll be hearing from Oracle. Oracle up by 1.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, again, another thing that he's been talking about, and we are too, and that has to do with Reddit, disclosing further details of what is set to be one of the year's biggest IPOs with the company and some existing shareholders seeking to raise as much as $748 million.
Reddit and the holders are planning to sell 22 million shares for about $31 to $34 each. That's what the social media platform said in a filing today. About 15.3 million of those shares will be sold by the company and the rest by investors who are Reddit employees.
It's been quite a slog, though, to get to this point. So let's get to it, and keep in mind that what Tim just laid out, at the top of the range, Reddit would have a market value of $5.4 billion. So that's a real market cap, if you will.
Yeah, let's get over to Amy Orr. She's Bloomberg News Equity Capital Markets reporter, and she's here in the Bloomberg Interactive Brokers studio. Just for context, Amy, Snap is about a $19.5 billion company. Meta Platforms, of course, much, much bigger.
Is that really apples to apples there?
But look, I mean, it is because these are both supported by advertisers. And like we spoke to earlier in our program, the bulk of the advertising money is going to these short form videos. And then here comes Reddit with essentially a technology and a product that is, what, at this point, almost 2 decades old, hitting the capital markets.
Yeah, but then a lot of people are looking back at Reddit and like comparing it to Meta when it was still Facebook, when it first listed on the U.S. stock market. And then that was the time when it was about to go profitable. And then this was the time as well for Reddit as well. So there are some comparisons, but it's also like, it's interesting too.
Okay, I just want to point this out. Meta Platforms, now the company formerly known as Facebook, was started in 2004. Reddit was started in 2005.
Yes.
So they're almost the exact same age. So it's hard for me to make that comparison that this is Facebook, pre-IPO.
Yeah. So here's what I'm interested in, Amy, is what is the business that is Reddit? Because Tim, didn't you say you're back in Reddit?
I'm like in Reddit for the first time over the last few months. I find it like
so you're too late for the direct share sale.
I'm telling you, too
but
late.
you bring it up in the newsroom, and people are like, "Oh yeah, I'm on Reddit." Like like people go to it for answers, right, or to find forums and like-minded people.
It's like
they have
crazy niche.
About.
It's super niche. Like you can find like plumbers to help you with plumbing. You can find drywall people to help you with drywall. Like it's crazy.
All right. Yeah, so a lot of people are sticky users of the platform as well. But then it's also funny how half of the users do not have a login. They also, like me, I would not go onto Reddit Reddit on its own. I Google it, and then it will lead to
what I do.
And especially because Reddit has a lot of original content. So like Google with its SEO and all will really direct traffic over.
What's SEO?
The social
search engine optimization.
Thank you.
Is that helpful to Reddit's bottom line? Carol and I were going through the S1 earlier. They said we get substantially all of our advertising. I think is the exact all of our revenue from advertising.
Yeah,
that's tough in this day and age.
It is tough, but also it helps and not helps at the same time because while it benefits, there are also periods when Google or Facebook or other places where essentially it will lead to Reddit may change its tools and like the parameters, and then that might hit. So like it's good and bad, but also the company is diversifying itself outside of advertising. So at the end of the day, the company CEO said everything on Reddit is at the end of the day linked to buying and selling a lot. Like whether it's people actually shopping for new running shoes. Yes. But search for things that will lead to advertising. So if you're buying a new pair of running shoes and then you want to see which model fits a long distance running better or anything in particular, people have really niche, as you said, niche needs for things, and then they'll go to Reddit. But it's also like the company is diversifying beyond just advertising.
What does that look like?
It's selling, licensing some of the data that it's been kind of doing for 20 years.
That's what I find interesting in your story. I read it saying it's in the early stages of allowing third parties to license access to data on the platform, including to train artificial intelligence models. So is that what it's going to be all about? That they have a lot of people like Tim and others who are spending some time there, sharing their data. That's valuable.
That's very valuable, and especially it's not only just for Google, for AI to learn, but also for companies like to actually see what are the trend, or hedge funds to see what people are talking about. Like, so there are many uses of those data, but whether they can capture it.
But is that a business?
Well, they got 60 million for a 1 year runway with a deal with Google, so it's actually a pretty penny.
Twitter used to do this and make money through selling the fire hose of data, and I don't know if they're still doing it since it's a private company, so it's hard to know, but this was a big selling point of Twitter back in the day that was like, hey, we have real-time information. They would actually sell to news organizations.
That makes sense.
And they would say, okay, well, we have people all over the world who are monitoring what's going on the ground. If we see signals of some breaking news event, we can get that to you before other people know about it.
Well, I'm glad you brought that up, because that's what I was, Tim and I were talking in the newsroom about this, Amy, and I'm trying to say, is it like Twitter? Like we all loved it, or love it, maybe still, X, and found it really useful, certainly for those of us in the news industry, like to find information, and yet the business model has struggled. Is that the same story for Reddit?
It's
or similar.
Like you said, it takes 18, 19 years for it to become profitable.
That's a long runway.
That's a very long runway. But then at this particular point in time, there are a lot of like tailwinds. So yeah, it's really up to the investor whether they actually believe in the growth going forward and not looking back and saying, you take so long.
What does it say about the IPO market that this could be one of the year's biggest IPOs?
So right now, the IPO market is still pretty subdued. So far this year, only 7 billion raised. Like this is already like March now.
To big fish, little pond?
Well,
little fish, big pond?
Yeah, and then we also had like one of the best few weeks in ACM market, just secondary share offering, block trades, convertible bonds. Those were huge. And IPO hasn't actually benefited that much. So hopefully this will get people talking and then create that buzz. And I guess Reddit wants to create that buzz with a direct share sale as well.
Remind us, ARM's IPO was almost $5 billion.
Yeah, and then it went up like 140% since then. So
okay, so 700. It is, but I'm just saying if this is the biggest IPO of 2024, then
Right, some perspective.
A fraction of what ARM was just last year.
We also had, like, earlier this year in January, there were $2 billion share sale as well. Immerse Sports and also Caspi, which is just a secondary listing from UK. So it's up there, but not top.
Still a subdued market.
Yes.
Overall. All right, great stuff. So appreciate it. Amy Orr, Equity Capital Markets reporter at Bloomberg News, joining us here in our Interactive Broker studio. Thank you, Amy.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 News in Washington, D.C. Hey, Amy.
Hello, Tim. President Biden has issued a budget proposal for a second term aimed at getting voters' attention with tax breaks for families, lower health care costs, smaller deficits, and higher taxes on the wealthy and corporations. Shalonda Young is director of the Office of Management and Budget.
The administration is working to bring down costs for the American people, including prescription drug costs, health insurance premiums, utility bills, and costs for everyday goods and services, all while taking on hidden junk fees that some banks, airlines, and other big corporations charge.
The $7.3 trillion budget is not likely to pass Congress. GOP leadership in the House has already said they oppose it. President Biden warned Israel against attacking the city of Rafah in southern Gaza as ceasefire talks with Hamas remain deadlocked at the beginning of Ramadan. Bloomberg senior reporter Ian Marlowe.
It's a complicated dance right now, and I think the harsh words and rhetoric we're seeing now is an example of that behind-the-scenes diplomacy failing to take hold.
Bloomberg's Ian Marlowe there. Israel has said that it plans to launch an assault on Rafah because it is the last bastion of the Iran-backed group. The House could vote this week on a bill that would ban TikTok unless its China-based owner, ByteDance, sells it. More on this from Bloomberg's Laura Davison in Washington.
This has sort of been an issue that's been percolating in Washington for a couple years now, and sort of this latest bill sort of almost popped up out of nowhere. It passed a House committee with bipartisan support. It passed unanimously, really just sailed through committee. It will then go to the House floor. But there's been some concerns recently that Trump potentially could interfere with this bill and potentially tank it.
Bloomberg's Laura Davison reports Trump posted on his Truth Social account that banning TikTok would only boost Meta CEO Mark Zuckerberg's profits. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do three things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average moving higher. The S&P, NASDAQ, they are in the red. 20 minutes to go ahead of the closing bell. But right now, let us head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed, but off their lows. With the Dow currently up 35 points. S&Ps are down 7, and NASDAQ is lower by 0.4%. The U.S. 10-year yield at 4.09%. Gold is up 5. Oil trading in the green. And Bitcoin tops 72,000. Among the main 11 S&P sectors, leaders were materials and energy, industrials, and tech were under pressure. And leaders to the upside in the Dow, UNH and Nike, while IBM and Boeing led to the downside. In the semi-space, NVIDIA fell again following Friday's big reversal. And in other news, Facebook fell the most since October after Trump said he is against banning TikTok. Wrapping things up, Oracle reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We got you covered on Oracle, and to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 and a half minutes left in today's trading session. Carol Master along with Tim Stanovic, and you just had Charlie breaking down the trade here. And, you know, there's a great story, Tim, that's on the Bloomberg terminal.
Yes, which one is it? It
has to do with the Magnificent Seven, right, which is something we talk a lot about.
Are they still all magnificent?
And, well, JP Morgan's coming out with a call. The ranks of Wall Street strategists playing down concerns about a bubble in U.S. technology mega cap stocks. We're seeing the play down and saying, don't worry, that's growing. Team over at JP Morgan Chase was the latest to flag that valuations of the 7 tech giants that have powered the record-breaking rally on Wall Street are currently lower relative to the rest of the S&P 500 than the average of the past 5 years.
Okay, here's what the analyst wrote. Quote, there is a concern over the very strong performance of the Mag 7, but we note that the group is currently trading less stretched than a few years ago, given earnings delivery. This is not to say that the group is immune to profit disappointments ahead, but in the case of general earnings disappointments, these stocks could still hold out better than traditional cyclicals that are reliant on the economy. This, again, not my words, not Bloomberg News' words. These are coming from the team over at JP Morgan Chase.
The Magnificent Seven stocks, you know who they are. We're talking about Apple, Google, parent Alphabet, Amazon, Facebook owner Meta, platforms, Microsoft, NVIDIA, and Tesla. These Magnificent Seven had driven the biggest gains in the S&P 500 last year. The benchmark index has scaled all-time highs in 2024. We've seen it continue, but the performance of those mega caps has diverged more recently.
So you've Tesla, for example.
Well, right.
Down 29%, Carol. just since the start of the year.
Meantime, you've got AI darling NVIDIA at a record high, or has soared to a record high, and I believe
up 74% this year.
Yeah, and I think it's your top performer once again in the S&P 500. It was last year, and we've seen it atop the list again this year. Apple shares entered a technical correction. We talked about that with Abigail earlier. A technical correction entering that this month. Concerns about slumping iPhone sales and regulatory pressures. So that one's been under pressure as well.
Okay, let's go get to our Drive to the Close guest, Michael Sheldon, Executive Director at RDM Financial, joining us on the phone in Connecticut. Michael, good to have you with us. How are you?
Good. Thanks very much. A pleasure being with you.
Yeah, it's always good to have you with us. Hey, I wanted to I don't know if you had a chance to listen to what we were talking about the Magnificent Seven, but on the one hand, you have all these questions from people about whether or not we're in some sort of bubble, and then on the other hand, you have companies like JP Morgan coming out.
And Goldman Sachs that said valuations are below the tech bubble peak.
Yeah, coming out and saying that valuations are actually okay. How do you see things?
Well, there's definitely been some concentration among the top stocks in the market over the past, say, the year or so. And that kind of got turbocharged a little bit with all the excitement about artificial intelligence. So, I mean, artificial intelligence is definitely real. We're probably in the early stages of this. But I think if you look at the valuation, the market's come pretty far over a relatively short period of time since the October lows of last year. So if you look at the markets right now, we're trading at about 21 times forward earnings for the S&P, which is about 23% above its long-term average. But if you look beneath the surface a little bit, the median stock, so half are above and half are below, the median stock is only trading at about 14% above its long-term average. So a small number of stocks are trading at above average valuations. Many times that's warranted by the growth they're producing, but they can get a little bit ahead of themselves. But there are stocks under the surface that are worth investigating.
And that's the point, right? If you broaden out and really look at the entire S&P 500 universe, you find out that there's a few that are skewing it once again in terms of valuations.
Yeah, that's a really good point. I mean, we've been looking for the market to broaden out for some time, and it really hasn't happened. So, I mean, if you take a step back, over the last 10 years or so, 10 plus years, which is a long time, growth has outperformed value, large has outperformed small, and the U.S. has outperformed foreign for much of the past 10 plus years. So a lot of people, ourselves included, we've been overweight those things, but on the surface, we've been waiting for other parts in the market to participate. So I'll tell you one other thing, that the RSP, which is the equal weighted S&P 500, over the past few days, it hit a new all-time high.
Yeah, I was just going to ask about that.
But that's the first time in 544 days, which is the third longest period since 1990.
So doesn't that tell you that it's broadening out now finally?
Yeah, I think over the past few weeks only, if you look at the S&P 500 versus the equal weighted RSP, for example, over the past 1 week and over the past 1 month, the RSP equal weighted index has outperformed the S&P 500. But it's kind of a little bit early to say that's the beginning of a real sea change just yet.
But it's good to see a broadening out, even the early signs of it, right?
Absolutely. Parts of the market we're getting somewhat overheated, and I think it's good to see broader participation. And really that would reflect that the market itself is doing better, the economy is reasonably well, people's forecast for profits going forward is more positive. So those are all positive things.
All right, broaden out, broaden out, broaden out. This is what we like to do. So the Russell 2000's up only not even quite 2% this year. How significant or how closely do you watch also what's going on with small caps, which are going to be probably much more closely tied to what goes on in the U.S. economy?
Yeah, that's a big part of the picture as well. So small caps, if they continue to rise, will really play catch up. And the question is, do you want to be in the market leaders, which are the large cap growth stocks, or do you want to play for a rebound? So we think you want to have some diversification, because again, if the RSP equal weighted is doing better, that means people are more optimistic. They're willing to sort of maybe get involved in some of the parts of the market that have lagged so far. So it's definitely too early to say that small caps have started to outperform. Mm-hmm. You also have to keep in mind, if you look at the Russell 2000, for example, more than 40% of those stocks are currently unprofitable. So you do have to be wary of that.
Hey, Michael, how due are we for a pullback right now?
I wouldn't be surprised to see some sort of pullback or correction over the next few weeks. The market's been up 16 of the last 19 weeks, for example. And if you look at things like sentiment surveys, for example, like the American Association of Individual Investors or intelligence, investors' intelligence numbers, they're kind of frothy right now. So I wouldn't be surprised to see somewhat of a pullback or a correction over the next few weeks. But I think you have to keep your sort of eye on the ball. As long as the economy is doing reasonably well, people have jobs and they're spending, inflation is trending lower, which is important. It's not going to happen. It's not going to come down every month. And the earnings outlook continues to be positive. I think that will help the market over the intermediate term.
You mentioned inflation tomorrow, an important CPI report, another inflation print, which we know came in hot last time. How much of what comes, if it comes in hot again tomorrow, how much of what we're hearing from you today could change a little bit? And just got about 30 seconds.
Yeah, I think if the inflation numbers really come in higher, say 0.2 or more, I think that could be a short-term setback for interest rates and the markets. But some of that's already reflected in the market, the fact that inflation is not coming down as quickly as expected. And you're seeing that in lower interest rates and a lower dollar over the past few weeks, I think.
All right, going to leave it there. Hey, listen, always appreciate it. Michael, take care. Have a great week. Michael Sheldon, Executive Director of RDM Financial Group, joining us on the phone here.
Hey, headline crossing the Bloomberg terminal. Rupert Murdoch's News Corp and the owner of the Daily Mail have held talks about a potential joint takeover of the Telegraph, one of the UK's most famous newspapers. This, according to people familiar with the matter.
Nothing to do with Photogate, though, huh?
Not yet.
Just kidding. Just having some fun. All right, we're watching that, folks. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks mixed, Oracle higher. Oracle will be reporting after the close of trading. It will report fiscal third quarter results, and investors do expect to see a stabilization in the company's closely watched cloud infrastructure unit. The rate of expansion in that business slowed in recent quarters. In the competitive business of renting computing power, we've got Oracle shares higher ahead of earnings, up by 1.5%. Reddit is set for one of the biggest IPOs of the year. The social media app plans to sell 22 million shares for $31 to $34 a piece. It is the latest step in an IPO saga that began more than 2 years ago, as we hear from Bloomberg technology anchor Ed Ludlow in San Francisco.
Even at the higher end of the range, right, $34 a share. On a shares outstanding basis, it's a $5.4 billion valuation, fully diluted $6.4 billion. But you're right to flag their last private round at $10 billion, which, you know, in Silicon Valley or elsewhere, it's kind of unpalatable to go through that process, but it does leave you some upside, especially if you have a retail investor interest in a name like this.
And that's Bloomberg's Ed Ludlow reporting from San Francisco. MicroStrategy bought another 12,000 Bitcoin for $821 million, the second largest purchase by the enterprise software maker since it began acquiring the cryptocurrency almost 4 years ago. The fresh hoard raises MicroStrategy's total Bitcoin holdings to around 205,000 tokens, or more than $14 billion. MicroStrategy up now by 5.8%. Those are our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Carol Masser. Taking a look at Bitcoin right now, Carol. Hitting a record today. It's up to $72,096 per Bitcoin. Yeah, I think
Bitcoin
unbelievable
heavy.
to a lot of people.
Great story you just sent me by our David Pan. Bitcoin's record-breaking rally appears to be creating around 1,500 new millionaire wallets daily, according to crypto analytics firm Kiko Research.
Okay, so the wallets are digital addresses on the Bitcoin blockchain in which users can store crypto. Data such as the number of tokens a wallet holds is accessible since the network is public and not controlled by any centralized intermediaries. That's the whole point of this stuff.
Supposed to be, right?
Yeah, however, the addresses are anonymous, making it hard to distinguish whether they're controlled by individuals or entities. So that's the important point here, is like we don't know if there are 1,500 new millionaire people daily.
Correct.
We are wondering if those are controlled by people or entities. I can tell you it's not my wallet.
Hence the transparency.
Yeah, such stuff's a little
No
bit.
transparency. Keep in mind, though, the original cryptocurrency, Bitcoin, has soared around 70% already this year amid exuberance over surging demand for U.S. exchange-traded funds that were the first allowed to hold the tokens, or first allowed, I should say, to hold Bitcoin back in January. Even so, the pace of new millionaire wallets being created is lower than during the last bull market run of 2021.
Okay, so that's when more than 4,000 wallets were reaching the $1 million mark every day. The high for the current year was 1,691 wallets. That was on March 1st. There's a cool chart in here from the last few years provided by Kiko Research.
The Bitcoin wallets one?
Yeah, it's pretty cool.
Why? Why is it cool?
Because it shows you that during the last bull market,
Yeah.
you can see the price, you can see how many more were created.
So sorry for
Per
those of
day,
you who
per
can't
day.
see it right
I'm sorry that we're not showing this.
Nice,
on there.
really nice.
So were you giving me like a trick question to try to like explain a chart for the radio
Perhaps.
crew? All right. In the future, I will not say there's a really cool chart in here unless we can show it.
We have an easy answer
Thank you
for
for the lesson, Carol.
Just if you're on the Bloomberg, you can find the story. Just search under the reporter.
The control room's
David
just shaking their head. They're like,
P-A-N, or go to Bloomberg.com, and you can also
this is
access
the abuse
the
that I
story.
deal with, guys. Okay.
Well, it's like, hey, let me show you. Oh, let me tell you about this great chart. Oh, but I can't show you.
Yeah, well, you know what they say? Show, don't tell.
Show, don't tell.
Yeah.
Lovely.
Yeah, thank you.
All right, it's a Monday, everybody. Stick around. We're heading over to our TV colleagues. Talk about the markets. Beyond the Bell starts right now.
Beyond the Bell Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of this trading day on this Monday. Scarlett Fu and Alex Steele here, counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast. We have Carol Masser and Tim Stenovic from the radio studio. Of course, welcome to our Bloomberg television viewers, Bloomberg radio listeners, and our YouTube audiences worldwide as we parse through some important milestones of this trading day. I don't know how many milestones that you've seen today, Carol, but it just seems to be
I think the milestone comes tomorrow.
So you say. You don't know that's going to happen. It could be a snooze or two.
It could be a snooze. What, tomorrow's CPI report? It could be. It could be, but at least it gives us a focal point and something to kind of talk around. Having said that, it does feel like a little bit of a mellow day and that we're just kind of waiting for that, and then we're waiting for next week's Fed meeting. We
guys,
have some earnings, though, after
it's time to take bets. Another day, another record for Bitcoin. Crossing the $72,000 mark for the first time, Alex. Up another $2,500 in the last 24 hours. We just did a really kind of a fun story about 1,500 millionaire wallets that are created each day. Have you guys seen this? It's among the most read in the last hour, thanks to the rally that we've seen in Bitcoin this year. It's not at the high that it was back in 2021, where there were thousands created each day. We also don't know if these are individuals or if they're like larger entities that are.
I just kind of avoided that, Scar, because I'm not one of them.
That's what I said too.
Like, all right, it's not me, so whatever. Also, like, I hate to say this, but what goes up can also come down. So, like, are you holding Bitcoin for the next 30 years as a diversifier, or are you going to be actively trading it? In which case, when it goes down, are you going to be selling, and then it gets to be in a world of pain?
Number go up.
Tell us how you really feel about it.
I'm just jealous it's not me who's in Bitcoin.
Both.
All right, there are the closing bells. Look at that. There we are. Okay, we wrapped up one day of trading here in the U.S., and it was really boring. So the Dow Jones ended up by about 0.1%, but volume was really light. The S&P down by 0.1, the NASDAQ up by 0.4%, but again, volume all light. I wonder if it's going to be a little sell into the news, buy the news scenario, Carol, but I agree with you. It's not been that exciting on a headline level.
Oh, my God. Right. It's been really kind of mellow, to say the least. All right, S&P 500. Let's just give you the breakdown, though, folks. 292 names actually gaining in today's session, 209 to the downside, and Scarlett 2 unchanged.
Yeah, we are marking time before CPI tomorrow, before PPI and retail sales on Thursday. You look at the sector performances, it is a mixed day overall. Yes, there are definite pockets of red. You have industrials, which had been doing fairly well, leading the decline off by 0.5%. Boeing is a big reason why. Consumer discretionary and REITs also in the red by 0.5%. On the flip side, your gainers include materials, that's Albemarle and Newmont, energy stocks, and consumer staples.
All right, guys, let's get to some of the individual gainers, if I may. Moderna, check it out. #1 gainer in the S&P 500 and the NASDAQ 100 today. That stock up almost 9%, 8.7% to be exact. Really continuing to see upside momentum, if you will. Rallying after a government trial website shows that the drug maker is starting a mid-stage study to test its experimental cancer vaccine in patients with a form of skin cancer. The trial, by the way, in collaboration with Merck, but that sent that stock definitely higher in today's session. Got a twofer for you. IMAX and Warner Brothers Discovery. IMAX up about 4% in today's session. Warner Brothers Discovery, that was a top gainer in the NASDAQ 100. That one was up about 3.9%, Warner Brothers. Actually, I should say IMAX coming out saying it set a new record in global market shares with Dune Part 2. I haven't seen it. I don't know if Tim, no.
Saw Part 1.
You guys
haven't seen
it?
Part 2.
I have not, but I also want to mention, of course, IMAX got a big shout out. The CEO got a big shout out at yesterday's Oscars from the Oppenheimer producers.
You're right, they did. All right, so good stuff. So anyway, so they're definitely part of the narrative today and definitely rallying in today's session. IMAX, as I said, set a new record in global market shares with Dune Part 2, notching 22% of the global box office in the second weekend of Dune Part 2. Legendary and Warner Brothers are the studios behind it, so that's why you saw probably Warner Brothers maybe also popping as well, up 3.9%. One last name, MicroStrategy, if we bring it up for you guys, rallying to its highest in, I think, 24 years. Up, 4% here in today's session. I scratched my head with anything to do with Bitcoin, but here we go. Bought another 12,000 Bitcoin for almost $822 million, the second largest purchase by the company since it began buying it almost 4 years ago. So now they've got total Bitcoin holdings to around 205,000 tokens or more than $14 billion. Those tokens bought between.
Alex is covering her ears right now as you talk about Bitcoin and MicroStrategy.
Well, no, I don't understand. Is it just because of the value and that's it?
I'm back to I'm just Ken right now.
Okay.
That's where I am.
I'm just Ken?
But I'm totally listening to you. I'm just Ken.
I thought you said I just can't.
No, I'm just Ken.
Is that the only one who didn't watch? I didn't watch last night.
I watched the whole thing. The whole 3.5 hours.
Way too late.
Scarlett's the only person I found who watched.
No, Carol did too.
The Ranganathan. Oh, okay.
Carol watched the whole thing.
It started at 7 o'clock.
Yeah,
It was
too late.
early.
Way-
Done
way
by
too
like
late.
10 o'clock or whatever.
Way too late.
No.
I'll catch the clips later today.
Google
Hey, I
I'm
do
just
want to
Ken.
talk about some of the decliners. I want to start with shares of Meta Platforms down 4.4% on the day today. It did fall as much as 5.9% earlier in the session, but still, even with the close right now, its biggest decline in about a year. This after former President Donald Trump reiterated in an interview with CNBC that he's against banning the Chinese-owned social media app TikTok because it would actually aid Facebook and make Facebook bigger. This is a sentiment that he shared several times over the last few weeks. Should remind you, it's up 36% so far this year, up nearly 200% last year. So a decline of just a little over 4.4%, putting that into context a little. Scarlett, you mentioned Boeing. Shares of Boeing finishing the day down about 3%. This after the U.S. Justice Department opened a criminal investigation into the mid-air blowout of the fuselage panel on the 737 MAX 9 back in January. We did hear from Transportation Secretary Pete Buttigieg yesterday that the FAA will rigorously assess Boeing after that blowout. Also, the head of Delta Airlines told Bloomberg on Sunday that he expects further delays to the 737 MAX 10 variant, which is still not yet certified. Shares of Boeing down 26% so far this year, lowest since November of last year. And here's one for Alex. EQT Corporation, among the worst performers on a percentage basis in the S&P 500. U.S. natural gas producer agreeing to buy back former Equitrans Midstream Corp for about $5.5 billion in stock. Shares closed down 7.7% today. This is the latest flurry of deals in the oil and gas pipeline industry, but investors sending shares lower of the acquiring company today.
All right, I'm going to play Romaine for a second. Can I just add one more gainer?
No, Romaine will add
Wait, we got Oracle, guys.
Oh, we do. All right, so let's go there.
We have adjusted EPS of $1.41, beating the consensus estimate of $1.38. And then let's look at the different revenue lines. Overall revenue adjusted was $13.28 billion, bang in line with what analysts had anticipated. But if you look at cloud revenue, it was $5.1 billion, slightly higher than what analysts had anticipated, $5.06 billion. Oracle says cloud services and license support revenue was up 12% to $9.96 billion. The stock moving up right now about 3% in after-hours trading. It has also maintained its quarterly dividend at 40 cents a share.
Yeah, decent operating margin too, right? That third quarter adjusted operating margin, 44%. That's above what the street was expecting. I mean, the stock's up on the year, up about 8% here. So definitely continuing a move to the upside, as Scarlett mentioned, now up about 2.5%. Oh, 3% even as it bumps even higher.
Okay, looking at shares of Vail Resorts, ticker MTN, down about 2.2% in the aftermarket. The company sees fiscal year total reported EBITDA $847 to $889 million. Second quarter net revenue coming in at $1.08 billion, shy of estimates of $1.15 billion. The company does see fiscal year net revenue, or fiscal year net, I should say, $270 to $325 million. Saw $316 to $394 million, so that came in below estimates. Second quarter EPS $5.76, coming in below estimates of $6.08. Again, shares down about 2.2% in the after hours.
I should point out the CEO saying in the results, given the unfavorable conditions across our North American results, we're pleased to say that we are basically resilient at the end of the day, that their ancillary businesses like ski and ride school and dining and rental businesses actually had strong growth, even though overall it was a little bit lighter than that.
Approximately 42% lower snowfall across our Western North American resorts through January.
Yeah.
That is, as you know,
and then what do you do?
global
Then you have
warming.
to pay for the snow, right? Then you have to have a snow machine. That's more expensive.
Only,
But then the rain,
only if it's warm enough to make it.
Right, and then the rain destroys all of it anyway.
Yeah.
Because it rains all the time.
Depends on where it's happening. They got a lot of snow in the last few weeks.
Right, and this is important because you guys, Tim was a ski bum and worked there, so that's why I was like, you got to break this because
The glory days.
You do
Thank
the ski things.
Appreciate it.
Which mountain did you ski, Tim?
I lived in Vail. I skied Vail, Beaver Creek. I skied
wow.
Arrowhead. Yeah. I was doing 100 days a year after college.
Huge.
Yeah, now I do none. So that's the way it goes.
All right, I don't know if there's AI in skiing, but I just want to mention another headline from Oracle. Demand for its Gen 2 AI substantially, that's their word, exceeding supply. So getting a little bit more of kind of the AI narrative and story, if you will.
It feels like they're setting the agenda for the conference call later on.
AI. I mean, to be fair, the stock is up almost 10%. So it was also cloud infrastructure contracts and new ones that really seem to do and deliver really well.
All right, good. And I just want to mention Advanced Auto Parts. I'm sure you guys were on it. It was up 3.7% just at the close. Wall Street Journal saying activist Third Point has a stake in the company. So
interesting.
Yeah, so we did see that one pop just in the last few minutes of trading. This was before the close. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again. We call it Beyond the Bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Carol Masser live in the Bloomberg Interactive Brokers studio. Do you want AI involved in your brain surgery?
If it's really good.
Okay, the reason I'm asking
well.
is because China is actually testing an AI assistant for neurosurgeons in 7 hospitals in Beijing. The bot's going to answer questions with citations based on more than 1 million academic records. Could help with CT scans, images. Eventually, though, the researchers envision the AI taking a more active role, warning doctors from pursuing risky procedures, for instance.
Yeah, there's a lot of questions about this, right? We have a great guest to talk about this because, you know, the idea of having AI helping in the operating room could be an issue of trust, but you do wonder, you could have a doctor who's had a little tired watching the Oscars or doing something else, and you do wonder about that element. So there's a lot at stake here, and we've got a great guest to get into it.
Yeah, Michelle Gaida is CEO of the Kroc Institute for Tech Diplomacy at Purdue. She's also former Assistant Secretary of State for Global Public Affairs. That was during the Trump administration from 2018 to 2020. Michelle joins us from Austin, Texas. Michelle, good to have you on with us. How are you?
Good to be with you.
Well, good to join. I'm so glad you're joining us on this because we've been talking a lot about AI, as you can probably imagine. But you and the team over at the Institute for Tech Diplomacy at Purdue, I got a poll on our radar from Edelman, and we talked to the Edelman team a lot about their trust barometer, and this one specifically has to do with trust in AI companies declining. It's not just here in the U.S., but it's around the world, too. How can companies that are working on this technology earn the trust of us?
So thanks for that question. I've seen that poll, and it says that about 35% of Americans now trust companies to do what's right when it comes to artificial intelligence. But let me give 2 other numbers for you. The first is 2030, which is the year that China has stated that it wants to lead and dominate in artificial intelligence. The other number is $51 billion. And that's how much China is committing to science and technology, which is up 10% from last year. They just announced this coming out of their National Party Congress. And I share those because there's important context in terms of the trust that we are putting in our government and in our tech companies to innovate properly when it comes to artificial intelligence. But it's not happening in a vacuum. That is happening in the context of a competition with adversaries across the world who want to use these technologies, dominate in these technologies, and compete with us in order to advance their value system and their systems of government, which are authoritarian, versus ours. So that's really important context. But this notion of trust is so central. And it's not about the tech, it's about the trust. And the good news is we don't just have to rely on government to get it right. We don't just have to rely on tech companies to get it right. And what the Kroc Institute for Tech Diplomacy at Purdue is doing is also making sure that citizens are involved in shaping this, that they have a right and they have a responsibility in order to help shape and dictate where AI goes. I'm here at South by Southwest in Austin. This is a gathering every year of creatives and leaders in media and in innovation. And that's why we're here having conversations around, well, what is the necessary role that you play in national security and in geopolitical competition? So it's getting everybody involved.
I'm curious.
And here's 2 practical ways to do that.
Well, hold on. I just want to jump in real quick because if there is one thing that unites Democrats and Republicans, there's only one thing, I think. It's kind of beating up on these tech CEOs when they do testify. And we did see in recent weeks examples of the way that Democrats and Republicans do not think that companies like Meta Platforms have guardrails on the way that they're serving content, the algorithms that they're using to feed content to, for lack of a better term, minors here in the U.S. So I'm wondering how you can rely solely on companies to actually get this right without involvement from government or without relying on government.
Yeah. Well, I would add and maybe challenge what you just said. There's actually another really bipartisan issue in D.C., and that is winning the competition against China, and specifically on technology. And so with that context, it isn't just about relying on tech companies to get it right, whether it's in the U.S. or in any of our like-minded partners and allies countries. And it isn't just relying on government. One good example, talking about bipartisanship, is there's a new House bipartisan task force on artificial intelligence. So you've got leaders in the House across both sides of the aisle coming together to think about how do we engage industry in the right way, engage the public in the right way in dictating what role artificial intelligence plays in our lives. That's a great place for those who responded to the poll and said they don't trust companies and they don't trust government to get it right. Then working with and getting involved with the members, there's 12 members in that House caucus and that task force, is a really good way to do it.
How do we do that? I mean, companies are going to be very careful. They don't love regulatory oversight. They don't like what they might deem as extreme regulatory oversight. I'm playing a little bit of devil's advocate. So how do we create quickly the right private-public partnership on this? And to be fair, it's got to be global. None of these companies are operating in a vacuum, right? We've seen this with financial regulatory oversight, and often Europe has led. We think about kind of climate, Europe has led. So how do we do this in a smart way and quickly?
It's interesting, you actually see companies, Microsoft, for example, trying to lead the conversation on AI and essentially saying we're not going to wait for government regulations to figure this out, and we're actually going to put out a proactive point of view on what we think some of the guardrails might be and initiate that conversation with government, not only here in the US, but to your point, in Europe and across other parts of the world. And that was a lesson learned, I think, from social media, where we're flipping the script now and seeing private sector companies try to initiate that conversation. And that's a good thing because, look,
Do you feel like, can I ask you something though, Michelle? Do you feel like the world has learned their message on not having enough oversight on social media? And I know we get into a free speech, it's complicated, right? It's not so black and white. But have we learned the lesson that, you know, not having enough oversight in social media and content and, you know, the false content that gets out there, the content that can hurt in so many different ways, have we really learned the lesson so that we get it right this time around when it comes to AI?
I definitely think you see some changes. So, for example, when Facebook came out, Twitter came out, there wasn't a House bipartisan caucus on social media because we didn't know that we needed one. And that all came after the fact. So now in the early days, you have things like this task force in the House trying to get ahead of it. You have companies, I mentioned Microsoft earlier, trying to get ahead of it. But here's the thing. We don't want to rely too much on and point the finger at government to say, go figure it out. Because if tech companies and innovators don't know where the technology is going, our government leaders sure as heck don't know where it's going. And so this has to be a collaborative conversation, not only with the innovators and the high-tech companies and with government leaders and policymakers, but also with customers of those tech companies and constituents of those politicians.
But how can we trust them to do it right? Come on, because they make money over, you know, having more eyeballs, the velocity on social media platforms. How can we trust tech companies to do the right thing here?
Well, that's where I don't think it just has to be a, hey, we're going to trust you and I'm going to sit here and watch and be a spectator and I hope you get it right. Whether it's asking that of tech companies or it's asking that of governments, it's, well, then what is the role of a customer? What is the role of an end user? And what is the role of a citizen in getting involved now on the front end in driving that conversation?
Hey, Michelle, we only have 30 seconds left. Should the U.S. force TikTok's parent company to divest TikTok?
Well, the U.S. is giving them the option to divest or be banned. But yes, because ByteDance is a Chinese company that required by law to provide information to the Chinese Communist Party, and it's a surveillance platform and it's an influence operations platform, so it is a national security issue.
I feel like we scratched the surface. Will you come back soon? Tim's angry because I got like 3 questions in a row with you.
Never again.
We have a ton to talk about.
Come back. Michelle Gaida, she is CEO of Kroc Institute for Tech Diplomacy over at Purdue, joining us from Austin, Texas. I'm sorry. I got a little excited because how do we
Fine,
trust
I want to talk
them?
to her too.
How do we trust them
I'll call her after.
to do the right thing? All right, now he's not even going to listen to me. All right, you're listening and watching Bloomberg Business Week.
It's 421 on Wall Street. We're keeping an eye on Oracle shares after hours. Oracle now soaring by 6.3%. It reported strong sales with growth in its closely watched cloud computing business, stabilizing. Cloud revenue up 25% to $5.1 billion in the period that ended in February, surpassing Wall Street's $5.06 billion estimate. So again, after hours, we got shares of Oracle. They're soaring now by just about 6%. An up day for the Dow, up day for the Dow, a down day for the S&P and NASDAQ. Dow Industrials up 47 points today, up by about 0.1%. S&P lower by 5, down 0.1%. The NASDAQ Composite Index down 65, a drop of 0.4%. 10-year 4.09% with a 2-year that's yielding 4.53%. Gold up 0.1%. 21.81 the ounce. West Texas Intermediate WTI crude up 0.1%, 78.09 a barrel. Bitcoin taking out 72,000 today, up by 4%. Bitcoin again now at 72,169. That is a record. Again, recapping after hours, Oracle tops estimates, shares now surging by just about 6.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, another piece of the Biden administration's sweeping policy response to climate change fell into place last week. That was when the SEC voted to approve highly anticipated climate disclosure requirements for public companies.
That's right, Tim. The SEC's new rule is groundbreaking in that it requires public companies to make certain climate disclosures, mainly reporting of greenhouse gas emissions for the first time. Large public companies will be required to disclose their direct or Scope 1 and Scope 2 emissions. Notably, they must do so only if they deem them material significant to their bottom line. That's what that means.
Okay, so all that said, some environmental advocates say it doesn't go far enough. Leslie Labruto is Managing Director of Sustainable Finance at the Environmental Defense Fund. It's a nonprofit that works to address climate change, which it calls the greatest challenge of our time. She joins us from London today. Leslie, do you think the SEC climate disclosure requirement goes far enough?
Hey guys, great to be here. To be honest, this SEC ruling, it's a positive development for businesses and investors. We needed this step. It was overdue, and finally, it's a chance to bring the United States to a point of consistency and rigor in disclosures that we hadn't seen before. So obviously, the commission will go further, but this is a foundational step that we need to take in order to start moving us forward.
How much further? Do you want the SEC to mandate that companies disclose emissions within their supply chain? Because that's what a lot of critics are pushing back on right now.
Yeah, I mean, look, we need to start somewhere. And at this point, when we see all of the considerations being taken into account, climate risk is financial risk, and this is where we need to start. And, you know, the SEC has long required disclosures across a number of different metrics. And finally, we're seeing a step forward in really getting public companies to where they need to be. And with the timeline of disclosures, it also gets smaller companies, gives them a chance to really get up to speed. And then finally, we can evolve on this rule over time. But for now, this is where we need to start to get the ball moving.
I mean, this is what ESG was supposed to be, I think, about, right? To really understand environmental, social governance issues and what risks financially, materially, they are for companies. Having said that, what the SEC is doing and Chair Gensler is doing, we're now getting a standardization, right? So apples to apples from company to company.
But it's more than that. It's apples to apples, but finally, we have an ability to foster transparency. It means that investors and people like you and me can finally start seeing the data, as you said, apples to apples, but it also builds a more resilient market, right? If you're in Louisiana and you're a company and you're not thinking about flooding, you're not thinking about the material risks to your business that are going to affect ultimately your resilience and your growth. And, you know, imagine if you're a utility company and you're not thinking about wildfires. I mean, if you look at the data, the U.S. alone has suffered $600 billion in damages from just about 100 weather events in the last 5 years alone. These are things that we're trying to start taking into consideration when we're looking at businesses and evaluating, you know, should I invest in this one or that one? We now have data around just climate risk, which again is a financial risk, that can help us make better decisions, help investors figure out where to allocate capital, and again, help folks from Main Street to Wall Street figure out where to put their money.
Leslie, we talked Scope 1 and Scope 2 emissions, but my understanding is the biggest change from the proposed rules initially that public companies are no longer required to report Scope 3 emissions are those from the supply chain and the downstream use of products, even though that these often represent the largest portion of a company's greenhouse gas emissions. So is that kind of a big bummer, to be quite honest?
I mean, look, again, we got to start somewhere, right?
Okay.
And when we look at where we got to start in the United States, we're asking public companies to now do something that, mind you, 99% of the S&P 500 already report on some metrics around sustainability and non-financial metrics in general. So for us, it's a chance to really bring us up to speed, and then we hope the SEC can keep evolving on this decision over time, right? This isn't a one and done deal. We have time to keep evolving this and, you know, bring the United States to, you know, where it wants to be in terms of fully encompassing climate risk as financial
When do we
risk.
see this move the needle for investors? Like, when do we start to see this type of data come out and actually move a company's stock price?
You know, a lot of this data already exists. We talked to one investor. They have they have to collect 25,000 data points right now just to get a view of climate risk, and it's oftentimes really inconsistent. Because this ruling is taking effect and we can start, taking time, in about a year, those 25,000 data points that might be inaccurate, we can start seeing them streamlined and be reliable. So again, investors can start looking apples to apples, and we can start seeing not only what are the risks, but how are these companies mitigating them as early as next year.
Right, and to be fair, I mean, Leslie, this is about how climate can impact financially, or does it have a material financial impact on a company? That's what this is about. This isn't necessarily assuming that it's going to force companies to do something better for the climate. Is that fair?
This is all about managing risk. It is asking companies to say, what material risks have you identified and what are you going to do about it? So that when we're reading reports, analyst reports, looking at a company, we can say, oh, they've considered these things that are straight up risks to the company. And we know that they're mitigating them. Again, I mentioned the stat about $600 billion in damages from weather events. Right. This is real stuff. These are real risks that we're talking about. And this gives us a chance to look at those and say, did this company consider them? Are they looking at the things that pose significant risks to their business that can affect me and you and investors in making decisions about allocating capital, where to put more money, and how to shift kind of, what we're seeing as the future for a resilient market in the United States.
Well, having said that, I don't know what work you guys have done over at the EDF, but I do wonder in terms of, the insurance industry. Tim and I and our Bloomberg News team, they have done a lot of reporting about, was it home insurance in California or Florida, where insurers are just kind of backing off because of the costs. Have you guys done works where you feel like certain industries, whether it's insurance, whether it's home builders, I don't know what, where they are, once we get a clearer picture, we might find that there's a lot more of climate-related material effects on their businesses that maybe has been way underreported?
Yeah, our team, we are constantly trying to equip the financial community with independent analysis of what they need most to make decisions around climate risk. And this completely includes the insurance markets as well. I mean, you said it so well, right? We're seeing insurance shifts all over the place, people retracting from markets, premiums going up. And a lot of it has to do with, we have no idea how to price and assess the risk that climate poses on businesses. So when we look at the insurance market, for example, it's a great chance for us to say, how are insurers thinking about this? Where can alternative tools step in to build resiliency? And how do we stop kind of fueling the beast, so to speak, by making decisions that put consumers at risk, like building homes in flood zones, right? And if we have a chance to start assessing data that's apples to apples, we can start making better decisions that, again, are working for just the general public and you and me.
It's so interesting, Carol, I'm looking at shares of Vail Resorts. They're right now down 5%. This is a company that owns many mountains throughout the United States, some outside of the U.S. The company came out with earnings and said that they had unfavorable conditions, 42% lower snowfall across the entire western North American resorts through January compared to the same period a year prior.
So this would play right into it.
Exactly. I mean, this is a company that has,
example.
Yeah, and that it's like, because of climate change, because of our shifting climate, they're seeing real detriment.
No, and so Leslie, this is the kind of thing that we're talking about. You're nodding your head. Is California, though, the holy grail? Because when it comes to rules, in terms of, in regards, I guess, to some of the climate, if you will, or sustainability reporting requirements, is California kind of the holy grail in terms of where we need to go with this? I know you say it's important, it's great, it's a first step, but what's the end game in your view?
We've seen different regulations come through in different states, and this ruling is a chance to really streamline what we're seeing. Obviously, different states have adopted different kind of rigor in terms of, where they want to see on climate reporting. Finally, because the SEC is an independent body, we're seeing a streamlining of the data that's going to be coming through. So it's a real chance to take the U.S. to a place that is consistent, right? And we've already seen sort of some of these multinational disclosure frameworks in other markets, Canada, Australia, the EU, China. The U.S. now has this as well to kind of bring us to a speed where it's international and global.
We only have 10 seconds left, but if the election, if President Trump wins the election in November, what happens to these rules or the way you think about things?
I mean, fortunately, again, the SEC is an independent agency acting on a mandate from Congress to protect investors at the end of the day and maintain
So you're not
market
concerned?
efficiency. Hey, you know, you don't know, but again, because they're an independent agency, we're feeling that these disclosures, hopefully, fingers crossed, are here to stay.
All right, going to leave it on that note. Hey, Leslie, thank you so much. Leslie Labruto, Managing Director of Sustainable Finance at the Environmental Defense Fund, joining us right here in New York City.
Let's get a check on the latest world and national news. Amy Morris is in the Bloomberg 99.1 Newsroom in D.C. Hey, Amy.
Tim, we're still working on a budget for the current fiscal year as President Biden has released his aspirational budget for the coming fiscal year. The White House expects the U.S. economy to cool this year and inflation to remain above the Federal Reserve's target. President Biden warned Israel against attacking the city of Rafah in southern Gaza as ceasefire talks with Hamas remain deadlocked at the beginning of Ramadan. Bloomberg senior reporter Ian Marlowe.
He's kind of grasping at straws to some degree. I think the U.S. is facing, several months into this, 5 months into this conflict, the real possibility that they just don't have as much leverage over Israel as they would like.
Bloomberg's Ian Marlowe sitting down with Balance of Power host Joe Matthew. Israel has said that barring a total surrender by Hamas, it has to launch an assault on Rafah because it is the last bastion of the Iran-backed group. Top lawmakers on the Senate Intelligence Committee are warning about the greatest U.S. national security risks. Virginia Democrat Mark Warner told CBS's Face the Nation, China still the biggest challenge.
I believe that TikTok, both controlled by the Chinese Communist Party, both collects data and as a news source, literally half of young people in America get a lot of their news all from TikTok.
He says China is aiming to control the tech domain and is actively stealing American intellectual property. Democratic Senator Robert Menendez of New Jersey pleading not guilty to revised charges in an expanded bribery case. The judge rejected Menendez's request to delay the May 6th trial in light of the revised indictment, which adds obstruction of justice charges. Now, when asked if he plans to seek re-election, Menendez told reporters, quote, "I wouldn't be announcing that in a courtroom." Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Oracle shares after hours. We're up as much as 11% just a couple of minutes ago. Right now, we've got Oracle shares advancing after hours. Oracle now higher by 9.3%. It's soaring after reporting strong sales with growth in its closely watched cloud computing business stabilizing. Cloud revenue up 25% to $5.1 billion in the period ending in February. That surpassed Wall Street's $5.06 billion estimate. Again, after hours, we got Oracle up now by about 9.1%. Turned out to be a mixed day for the U.S. stock market. S&P 500 index down again ahead of the CPI report. Right now, we got the S&P lower today by 5 points, down 0.1%. S&P ending the Monday session at 5117. The Dow up 47, up 0.1%, while NASDAQ was down 65, a decline today of 0.4%. 10-year 4.09%, the 2-year 4.53%. Spot gold today did advance by 0.1%, 21.81 the ounce. Crude oil, West Texas Intermediate up 0.1%, 78.10. Perhaps the big story today involved Bitcoin surging another 4% to a record at 72,217. Well, as for the overall market backdrop, Michael Sheldon is Chief Investment Officer at Hightower RDM Financial. And right here on Bloomberg Business Week, he told us that we are overdue for a stock market pullback.
I wouldn't be surprised to see some sort of pullback or correction over the next few weeks. The market's been up 16 of the last 19 weeks, for example. And if you look at things like sentiment surveys, for example, like the American Association of Individual Investors or intelligence, investors' intelligence numbers, they're kind of frothy right now. So I wouldn't be surprised to see somewhat of a pullback or a correction over the next few weeks.
And you can hear more of the conversation with Michael Sheldon on the Bloomberg Business Week podcast. Again, recapping, we've got Oracle surging after hours. Oracle shares now up by 9.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Well, last week at the State of the Union, President Biden welcomed an Alabama woman whose IVF treatments were stalled. Also, the first American conceived through IVF was also in the room. That was a guest of Virginia Senator Tim Kaine. Indeed, Democrats have seized on access to IVF as a key vulnerability for the GOP ahead of November elections, even as Republicans rush to defend their positions on the popular practice.
All right, you guys all know, you're going to recall this. Alabama's fertility industry has definitely been in focus in the wake of a ruling from the state Supreme Court that said frozen embryos are considered children, meaning people who destroy them could be held liable for wrongful death. Since then, Alabama Governor Kay Ivey has signed a bill that protects clinics and fertility specialists from being prosecuted under the state Supreme Court ruling. And at least some fertility clinics in the state have resumed IVF. So a little bit of a rollback. You have seen Republicans largely kind of dial down some of the pushback or kind of stern, if you will, oversight of these clinics.
Yeah, we've seen a lot of moves very quickly in a very short period of time. Riley Griffin is all over this story. She's Bloomberg News U.S. healthcare reporter. She joins us from our Washington, D.C. bureau. Riley, we've been eager to get you on to talk about, like, big picture here, the business of IVF, what's been happening in the space, and just how quickly things changed in such a short period of time after the backlash. So just take a step back and tell us where we are when it comes to Alabama and where we are when it comes to other states that might have an issue like this.
It's a great question, Tim. There are a lot of moving pieces. So as you mentioned, back on February 16th, we saw the Alabama State Supreme Court rule that embryos were considered children or humans and thus had certain rights that could lead to the criminalization of providers or patients in the case of the destruction of an embryo. And at that time, Alabama Fertility, which has 3 locations around the state, and the University of Alabama at Birmingham had actually paused IVF treatment in order to assess the criminal liability faced by their providers. As you mentioned, Alabama Governor Kay Ivey has since signed a bill into law that protects clinics and fertility specialists from being prosecuted under the state Supreme Court ruling. Those are 2 key clinics in a state that only has 8 clinics, so to speak.
Wow.
And one, though, however, the Center for Reproductive Medicine at Mobile, infirmary has not yet resumed treatment. So they are still trying to understand the legal ramifications and believe that the law, quote unquote, falls short of addressing the fertilized eggs stored across the state. So each clinic is trying to suss this out for themselves, while legislators in the state moved really quickly to offer protections. There are questions about whether or not this goes far enough.
Riley, what I always care about and what we do so well at Bloomberg and you and others do is just what is this industry, IVF? Because you talk to somebody who's gone through it and you're like, wow, this is a big industry because, you know, they get the lowdown, they understand the costs involved and so on and so forth, the health coverage or not, whatever. But give us some size and scope in terms of the IVF industry in the United States.
Yeah, I mean, it's a booming industry, and for good reason. 1 in 6 Americans need IVF in order to have children. This is a key part of family planning in this country, and an increasingly normalized one, regardless of whether or not you're a Democrat or a Republican. And so IVF has become a medical option, a healthcare option to allow families who otherwise couldn't have children to do that kind of family planning work. So it's an increasingly large market. Certainly in some states more than others. As I mentioned, Alabama only has 8 clinics. It also has a smaller population. But the question is, how does this play out state by state? Right now, we're not seeing these kinds of limitations on a national scale or through national legislation. That's not to say it won't happen further down the line. There's a lot of speculation about whether or not one day the U.S. Supreme Court will have to weigh in on whether an embryo is considered or deemed a person. We call this the personhood movement. But for now, it's a state-by-state question. And Alabama, Arizona, Florida, some of these red states are where we're most closely watching to see if the industry takes a toll.
What do we know about polling and how it plays out polling-wise?
Yeah, I don't know if you remember, Tim, Kellyanne Conway, a Republican pollster who ran former President Donald Trump's 2016 campaign. She had the most interesting data. IVF really is much more broadly supported than abortion, including among conservatives in this country. So she found recently that 78% of anti-abortion voters and 83% of evangelical voters support access to fertility-related procedures and services, which might make sense. Again, this is in the name of having children, of family planning. So that data has really immediately been a flashpoint in this broader debate, and one that really sent divisions throughout the Republican Party. Quickly after we saw the University of Alabama, Birmingham, and other clinics pause treatment, there was a lot of backlash. And so that data and memos within the GOP from leaders urging candidates going into the November elections to slow down and support IVF really rang clearly in those days. Presidential candidate and former president Donald Trump came out quickly in support of IVF treatment. That's in contrast to the comments that he's made around the overturning of Roe v. Wade. You know, he's claimed he's quite anti-abortion.
Well, it's kind of interesting. There's a lot of stuff as we, do the countdown to the November elections, and you do wonder how much, clout it will play. Certainly the rollback of kind of Republicans' opinion maybe made them kind of realize, just like the abortion issue, this can be so instrumental in terms of how someone votes in an election. Right?
Counting down, we got a lot of counting to do.
I have a lot of counting to do.
Until November.
Riley Griffin, we're going to say goodbye. Thank you so much. We've been wanting to touch on this for a while, so we appreciate that we could get to you. U.S. healthcare reporter at Bloomberg News from our Washington, D.C. bureau. But it also makes me wonder, it's, I think, about a $5 billion, the U.S. fertility market. It's like more than $5 billion, I think, here in the United States.
I would imagine growing, too.
Growing, and I wonder, though, a lot of it is probably private clinics, smaller clinics, or small, multiple clinics, if you will. And I just wonder their lobbying efforts, like how powerful they are.
And increasingly companies offering benefits associated with this that could get more and more people to do this.
Yeah, exactly. Anyway, good stuff, and certainly on our radar as we get ready, certainly for the presidential elections, but certainly top of mind maybe for voters. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are keeping an eye on Oracle shares right now, and they are surging after hours. Oracle right now up by 9.4%. Oracle did report strong sales, signaling that the growth of its closely watched cloud computing business is starting to stabilize. After hours, we got Oracle up now by 9.1%. Bank of America plans to expand the scope of its commodity energy transition business, and with that story, here's Bloomberg's Dan Schwartzman.
Charlie, it's a move Bank of America says will require additional headcount as more clients look to reduce their carbon footprint. The bank is expanding its presence in global gas and power markets, as well as in environmental products trading in response to client demand. Identified by BlackRock as a mega force that's already driving markets and economies, the energy transition has been widely hailed among financial professionals as a vast money-making opportunity. Banks creating or building out their transition finance desks include Citigroup in the U.S. and BNP Paribas in Europe. Charlie?
And that's Dan Schwartzman reporting. MasterCard has named John Huntsman as the payment firm's vice chairman and president of strategic growth. He'll join MasterCard, including a role on its executive leadership team on April 15th, focusing on building out the company's commercial partnerships with governments and public sector institutions. Huntsman has served in a variety of public sector roles, including as U.S. ambassador to Singapore, China, and Russia. MasterCard shares today virtually unchanged on the day. And Apple is preparing to open its 8th store in Shanghai this month, adding to its largest retail network after the U.S. at a time that iPhone sales in China are slowing. And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody. Tim and I getting ready to wrap up the Monday edition.
Oh,
Monday's over.
It is, yeah. You had good energy for Monday.
I did, didn't I?
Yeah.
We had some great guests. Like, you know, it was kind of nice.
Good show.
Last
Thank you
week
to the team
was-
in the control room for
Yes.
always making it a great show.
Last week was a crazy, crazy week.
It was nuts.
Between Jay Powell testimony and other stuff going on, the monthly jobs report, blah, blah, blah. It was just like nonstop. So I felt like we had a moment to kind of catch our breath, and I'm glad we were able to talk a little bit about IVF. I'm glad we were able to.
We wanted to do that story for a long time, but we haven't had room for it because we've had so much.
But guests about oversight of AI. Like,
Yeah.
it was nice.
You know what else
Right.
happened last week?
What?
The National People's Congress.
Dude, it's over. Well, there may be some committee meetings still
There's
going
some
on right
stuff
now.
going on. Oh, that voice.
Who
you
is that
hear.
guy?
That voice you hear.
He just came in.
Doug Krisner.
You're doing well.
Do we let anybody just come in?
I
and-
guess you do. Change the clock and you still have good energy. That's great.
I felt good.
Still
I woke
light
up
out.
yesterday. I got to sleep in. I said to my husband, "You got to take care of the dogs. I'm sleeping in." I woke up and I've had a little extra pep in my step.
Good.
Even
You were the only one.
All
This
right.
is the bad. It's the bad shift.
We talked a lot about
bring
CPI
forward.
tomorrow.
Okay, so we had inflation data for China over the weekend.
Okay.
Interestingly, we've had a couple of months of deflation at the retail level, so consumer prices
Good,
that have
right?
been in decline actually popped by around 0.7%. So there's a lot of activity maybe happening under the surface of the Chinese economy,
Yeah.
not in areas that people would like to see. Property remains weak. We've talked a lot about that. But in the services economy, travel, restaurants, that type of activity, particularly, I think, in the larger cities, what they call the Tier 1 cities.
Right.
We were talking with a guest last night about how much activity is going on in Shanghai. I mean, okay, yeah, big city like that, but maybe it's not as robust in some of the second and third tier cities.
Well, you know what was interesting? A story came up on the Bloomberg about iron ore plunging the most since 2022. Inventories piling up in China. So speaking to kind of disappointing demand in China. So I just another kind of, as you try to put together the picture of China, as you know well.
Producer prices have been down in kind of deflation for a year and a half right now. So when you're talking about components at the wholesale level that may be reflective of kind of the manufacturing economy, it's not good
Not good at all.
Well, I want to go back to this idea of seeing some activity in the first tier cities versus second and third tier. How good of news is this for the Chinese government?
I don't know. One of the things you mentioned, the NPC, one of the things that came out of the NPC was the employment growth in the urban centers. They want to add 12 million jobs over the year. Doesn't sound like a lot, but you've got a lot of college graduates that are going to be looking for work. Many of them are going to be looking for work in the big cities. So this is kind of the handshake that may need to take place between the private sector and the government.
As somebody who watches this so much with our team out in Asia, this idea, though, that President Xi and the Chinese legislature, voting to change a law that really kind of cements President Xi's control on the party. Not surprised,
No.
right? You know,
He's the guy.
He's the guy. I don't know. What is the optics on that to kind of the rest of the world?
Well, I don't think it's surprising. It's kind of maybe another move toward it becoming more formalized.
Yeah.
But one of the things that I think, if you look at the
he
number
need to
two,
formalize it?
well, not really.
Okay.
But if you look at the number two, the premier, who typically has kind of control over the economy, at least in theory, there has been a shift. So Li Qiang, the new premier, unlike Li Keqiang, who was the last premier, perhaps a little bit more beholden to the president and maybe less of an independent thinker. So it's going to be kind of towing the party line.
Yeah.
I know your show was
So to
happening
speak, yeah.
last night, but did you watch the Oscars at the same time? Did you have a stream
No, I
of
didn't.
the Oscars?
Didn't.
Carol watched the whole thing.
Did you?
I did. I'm always interested in it. It's a big economy. We certainly get into it with screen time out there and Lucas Shaw. But
It's a company story too. Comcast cleaning up.
Yeah. Yeah.
Netflix? Did they?
Okay.
Did they,
No, Netflix was no.
No. I mean, Oppenheimer was the really big winner. Why do you say Comcast?
Because they're Universal.
Oh, okay.
They own
You got
Universal.
10 seconds.
All right, gotta go. All right, that's gonna do it for Tim and me. Have a good and safe evening. Balance of Power start right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President Biden drops his budget, a $7.3 trillion plan for the next fiscal year that will go nowhere in a Republican-controlled House, but offers a window into the presidential campaign.
Meanwhile, the president and Israeli Prime Minister Benjamin Netanyahu engaging in a bit of a war of words over the weekend over red lines and Rafah as Ramadan begins without a ceasefire agreement.
Our guests today, Acting Labor Secretary Julie Su and Carmel Arbit of the Atlantic Council. Kaylee, happy Monday and happy Budget Day.
Indeed.
This is time for the wonks to celebrate. The president traditionally, of course, that Monday after the State of the Union dropping his budget proposal, and I keep hearing the word aspirational.
Yes, because while this may be many things that the president would like to achieve with this document, the likelihood any of it becomes reality depends on Congress, which he does not have entire control of at the moment. But as you say, Joe, really we had a sense already of what was going to be in this budget because President Biden had his State of the Union last week where he outlined a lot of these policies and he also highlighted his administration's achievement in the labor sector during that speech. Take a listen.
The great comeback story is Belvedere, Illinois, home to an auto plant for nearly 60 years. Before I came to office, the plant was on its way to shutting down. Thousands of workers feared for their livelihoods. Hope was fading. Then I was elected to office and we raised the Belvedere repeatedly with auto companies knowing unions would make all the difference. The UAW worked like hell to keep the plant open and get these jobs back, and together we succeeded. Here tonight is UAW President Shawn Fain, a great friend and a great labor leader. Shawn, where are you? Stand up. And Don Sims, a third-generation worker, UAW worker at Belvedere. Shawn, I was proud to be the first president to stand on the picket line, and today, Dawn has a good job in her hometown, providing stability for her family and pride and dignity as well. Showing once again, Wall Street didn't build America. They're not bad guys. They didn't build it, though. The middle class built the country, and unions built the middle class.
Joining us now for more on labor in the U.S. is the Acting Secretary of Labor, Julie Su. She is here with us in our Washington, D.C. studio. Madam Secretary, thank you so much for coming to Bloomberg Television and Radio on Budget Day.
Thank you so much for having me. Yep.
And we saw within the budget almost $14 billion requested for the Department of Labor, more money specifically requested for worker protection agencies within it. What is the president trying to signal to American workers, not just with his State of the Union last week, but with the policies that he has proposed today?
That's right. So you just showed one of my favorite moments of the State of the Union, what he said about workers, what he said about unions, his acknowledgement of UAW President Sean Fain, and just the historic wins that he's had. I think, you know, this president has been very clear that he intends to be the most pro-worker, pro-union president in history. And his support of workers on the picket line, his support of the working class demanding, their fair share of profits. He made a statement also about, no billionaire should be paying a lower tax rate than a teacher or sanitation worker. The budget also reflects those values. And so for the Department of Labor, there is a budget request that has to do with connecting people on pathways to good jobs, because his historic investments are about making sure that good jobs are being created in every community, and also about enforcement. The former is about building a high road to the middle class, and I always say we can't build a high road if we don't combat the low road. So we need to enforce, combat wage theft, combat misclassification, and make sure workers go home healthy and safe at the end of the day.
Within that $14 billion that Kayleigh mentions, I see $2 billion for worker protection and empowerment. I think it's $3.5 billion for shoring up the unemployment system. The overall ask is down from the last fiscal year. And I wonder if it's less than you asked for as acting labor secretary.
I mean, I obviously support the president's budget. It is... We need to both deliver on the things that the president has promised, and I think we need to be strategic and smart about how we use resources. I have said from the time I got to the Department of Labor that we need to use the full authority, budget, talent that we have to make life better for working people in every way that we can. What we have seen are increases in the budget from certainly the prior administration, yes, but also this one has some request for increase also, because we are seeing real issues in the workplace, including, growth. Child labor is we need to combat child labor. It is unconscionable that children as young as 13 are working on the kill floor on the night shift with toxic chemicals. That just shouldn't be happening in America. And our job is to enforce the law, and our request for a budget is to make sure we have investigators on the ground who can combat those kinds of practices.
Well, Madam Secretary, today isn't just Budget Day. It also marks 1 year of you serving as acting labor secretary in the U.S. And it's been quite a year in regard to the labor movement. There's been a lot of unrest, a lot of strike activity, a red-hot labor summer, as we were describing. It extended even far beyond that, and the UAW is just one example. What are you bracing for going into your second year as being acting secretary? Could we continue to see that level of activity?
So 2023 was a big year for working people, right? Unions and their members made historic demands and won historic contracts, right? We saw, on average, double-digit wage increases in the first year of a number of contracts, from Hollywood to hospitality to healthcare workers, from dock workers to delivery drivers, auto workers, of course, really set a high bar, teachers, right? I mean, across multiple industries, workers basically said, we demand more equity. We want our fair share. And, I think we've also seen decades of a growing divide between CEO pay and frontline worker pay. And that gap, that really, workers basically demanded a change to that. It's time to do better. And the president has said the same thing. And we're also seeing the biggest positive views about unions in a very long time in this country. So I think it's not an accident that at the same time that workers are really organizing, they're showing solidarity with one another, and we have a president that's been very, pro-worker, that those things all this stuff is happening hand in hand. And so we expect that this next year will be another year where workers do well. The president's been very clear. An economy that does right by workers is an economy that's stronger for everybody.
Does that include labor action, though? I guess, is our question. Are we going to see picket lines this year to the extent that we did last? Because the symbolism that we just saw of President Biden pointing up to Sean Fain carries a lot of weight. And there are a lot of folks in the country who might not associate themselves with the organized labor movement, who might have been put off by that. What would you say to them?
Well, like I said, public support for unions is at an all-time high. Some studies say that about 60 million working people in this country would join a union if they knew how, or if it was easier to do so, right? If there wasn't so much backlash when workers try to do that. And we have seen that backlash too. We've seen workers in many industries who voted to join a union and are still fighting for their first contract because, right, it takes too long. I would say that working people across this country are not only those who are in unions are benefiting, but after President Fain led the union to a tentative agreement with the Big Three, non-union auto employers also increase their wages. And it's when unions do well, it sets a high bar. Sometimes when I've been talking to at the bargaining table or talking to parties, sometimes what I'll get a question. I'll hear this pushback. Well, we can't pay a higher wage because it's too far above the market wage. And truly, President Biden's vision is that instead of telling workers that they need to keep accepting less all the time, we should question why the market wage is not itself higher. And so that's, we support the ability of workers to get more money in their pockets and to have more secure lives through good jobs.
Of course, one of the concerns, though, that stems from higher wages is that higher inflation may come with it, that you could end up in kind of a wage price spiral dynamic. Not to say economists think we're there right now, but looking at the labor market data, we had Jobs Day on Friday. Obviously, wages weren't super hot, but neither were the job gains. In fact, we saw downward revisions for the first few months of 2024. And if it all comes down to the fight against inflation that the Fed still seems committed to, it doesn't seem like they're going to be easing policy anytime soon. If we're not talking about policy easing for the next several months, what do you see happening to the labor market over that interim period of time? Could we see unemployment actually going above 4%?
So several things. One is revisions are part of the regular course of Jobs Day numbers. That's why we also don't make too much out of any 1 month's numbers. If you look at the 3-month average, it's 265,000 jobs have been created over a 3-month period. I don't think there is a better definition of a soft landing than that kind of job growth. And President Biden's economic policies and what's happened in this country has defied expectations in every way. Job growth, the unemployment rate right under 4% for 2 years and running.
But can it stay that way if policy stays this way?
Well, and people have also always said too, right? Like you can't have higher wages and control inflation. But the numbers don't lie. I mean, this is Bidenomics. This has happened, and we want to see real wage increases because more money in workers' pockets is a good thing. More money in the, at the kitchen table, right, where families are making hard decisions about what they're going to buy and how to live a secure life. You're never going to hear me say that making sure that working people get what they deserve is a bad thing. I don't think that we have to choose between families paying prices that they can afford and getting wages that are going to allow them to feel some security. It's a false choice.
Kaylee reminds us that it's been a year for you in this role as acting labor secretary. If Joe Biden is reelected and we are in the same predicament we are now with a divided Congress, would you be willing to serve in a continued acting fashion if you can't get a vote on Capitol Hill?
Well, I've been so proud of being able to serve in this administration for this president and to try to help deliver the kind of economy that the American people and the American worker needs and deserves. I would be proud to continue to do this because as the president made clear in his State of the Union, he's very clear-eyed about the moment we are in, about the challenges we face domestically and globally, but also has a very clear vision for how we combat how we meet those challenges, right? How we combat inequality, how we make life better for working people, how we increase global security, and it's an incredible privilege to serve alongside my fellow cabinet members to try to reach that vision.
Maybe we're now in a world where confirmation votes are irrelevant.
I mean, I'm still hopeful about it, and I'm grateful for the support I've received from many, many senators. I think the process is really important. At the same time, we have a very big job to do in this country. We're coming out of a massive crisis, and we have to be able to deliver, and we're focused on delivering on almost $2 trillion of investments in the president's Investing in America agenda. We have to make good on those promises, and I'm laser focused on doing that. I get up every day trying to figure out how to do that better and how to make life better for American workers.
Well, we're delighted you could come and sit down with us for some time today.
Thank you.
Madam Secretary, thank you. Our Acting Labor Secretary, Julie Su, with us here on Balance of Power. Coming up, we'll take a deeper dive into what's inside the president's budget plan for 2025. That's next on Balance of Power, Bloomberg TV and radio.
This is Balance of Power on Bloomberg TV and radio. President Biden today revealed his $7.3 trillion 2025 budget proposal, a plan that has little chance of actually becoming law in a divided Congress. Let's bring in now Bloomberg reporters Michelle Jamrisco and Gregory Cordy. So happy Budget Day to you both. Michelle, we got a lot of this in the State of the Union last week, a lot of signals of what exactly the president was going to be asking for. But at the end of the day, that's what this is. This is an ask, and he knows that. We've described it as aspirational. So what exactly is he trying to signal with this pretty lengthy document?
It's an ask. It's a letter to Santa, as one of my longtime Congress editors used to say. Or if you're the White House, they say it's a statement of values. So they are repeating, as you say, a number of themes that they got to in the State of the Union. They want to speak to what they're saying is a middle class, a strong middle class. You know, you hear all the time about building up the middle class from the ground up and the middle out, building up the economy as such. And so they talk about a lot of ways in which they'll provide more relief for higher costs. They talk about housing costs, trying to provide this new tax credit there, childcare, which has been on their domestic wish list for a very long time, subsidy there, and then also talking about bringing down drug costs in other ways, trying to do more negotiations with drug companies, give another cap, a wide-ranging cap on drug costs there. So different ways that they're trying to bring Americans' costs down, and then saying that they're going to pay for all of this through new taxes on corporations and on the wealthy, including a billionaire tax that would raise as much as $500 million over 10 years, they're saying. So they get out a lot of these values in this budget, but as you say, very unlikely to come back to the president's desk for a signature.
God knows they've tried on those tax hikes. They've not worked so far, so therefore the promise of a lower deficit becomes difficult to make good on here. Gregory, this comes with a $30 million ad buy. I say this, the budget coinciding with a roadshow that follows the State of the Union. How much of this, I keep hearing aspirational statement of values. What was it, a letter to Santa?
Letter to
I like
Santa.
that. How much of this is a campaign statement versus a presidential one?
Yeah, the final budget before an election is always a political document, as was the State of the Union speech. Sure. A very political speech, probably about as political as you can get away with in that venue. And of course, this is going to be dead on arrival, especially in the House of Representatives. Remember, we haven't even passed last year's budget yet completely. We haven't finished that cycle, and we're already starting the next cycle. But for the Biden White House, it certainly sets a statement of values, a statement on priorities, and it's going to be, they are going to integrate this official White House message with the campaign message to talk about how the president has delivered on some of these things. One of the biggest frustrations from the Biden campaign is that some of the economic numbers are starting to look better, but that's not being reflected in the public opinion polls. And so they understand they have to aggressively get out there and talk about their issues and talk about what the president's already done and what he would do in a second term.
Well, and he has been getting out there. He was in Georgia over the weekend. He's in New Hampshire today. He'll be visiting some other swing states in the coming days. But there is a primary in Georgia tomorrow on both the Republican and Democratic side. We know who likely is going to be the winners. Can it teach us anything, though? And Trump could almost secure the nomination at that point, right?
Absolutely. So there are 4 states up tomorrow, Georgia, Mississippi, Washington, and Hawaii. The way they stack up, it might be the wee hours of the morning when we hear from Hawaii before we know that former President Trump has officially clinched the nomination. What we're learning really isn't anything from any one of these states, but just that, look, this is going to be the earliest, the second earliest actually in history that we have both candidates clinching the nomination. President Biden is likely going to almost certainly going to clinch tomorrow as well. And so, but these are also like 2 candidates that have been central figures in American politics, American life, dating back half a century. These are 2 very well-known candidates. They've been campaigning for a long time. This is going to be the longest general election campaign. It already feels that way, but objectively, it's going to be the longest campaign in history.
He's, of course, bringing the issue of Israel with him. It's one that certainly the president cannot avoid at this point. He's been dealing with progressive outrage over this and said over the weekend in an interview that he would draw a red line on Israel invading Rafah. We are now 1 day into Ramadan. Are you surprised we're drawing red lines following his former boss's experience with that in Syria?
It's been a gradual escalation, really. I mean, he was asked about a red line, and it did kind of send off flares for those of us who remember what that sort of terminology did under the Obama administration. I think the White House is understandably trying not to use that terminology, doesn't like that terminology, but there is no secret, and they've kind of acknowledged this as well, is that there is kind of an escalation in terms of the Biden-Bibi relationship right now. There is, certainly some love lost in a long time, as they say, 50-year relationship there. A lot of heat taken on both sides.
Michelle, thanks. Michelle Jamrisco, of course, and Gregory Cordy with us at the table. Thank you both. Coming up, former President Trump doubling down on threats to hike tariffs on China. We'll have more on that next on Balance of Power, Bloomberg TV and Radio.
Mr. President, is there no concern that China could impose retaliatory tariffs or retaliatory actions that would make doing business in China difficult for American companies, which are dependent on China for growth?
That's okay. Yeah, sure. You know, we went through years and they didn't do it with me, and they never pulled that trigger. That's a big trigger for them to pull. But even if they do, let American companies come back to America.
Donald Trump speaking earlier today in an interview about the possibility of escalating tariffs between the U.S. and China. Joining us now to talk about this, what it might mean for our trade relationship, is Tom Orlik, Bloomberg Economics chief economist. Tom, you're our China expert. You lived there and covered Beijing for years, and I wonder your thoughts on the numbers we're hearing. He had floated a 60% tariff at what point, and what that would mean if just not the end of our trade relationship.
So Donald Trump knows from 2016 that tough on China is a vote winner. So it's no surprise that on the 2024 campaign trail, he's banging that drum again. The surprise, Joe, is the extremity of the position which he's signaling he's willing to take. 60% tariffs, as you mentioned, and as we saw on that clip, if China retaliates, bring it on type attitude. So we've run 60% tariffs through our model of the global economy, and the results tell us that at that level, tariffs would effectively turn off all imports and exports between China and the United States. So really deglobalization on steroids.
Well, and that's absent any retaliatory moves from China. That's just if the U.S. were to impose 60% tariffs, that's the effect it would have.
So if we think about China's exports to the United States, very often it's goods with a very low margin. Think about electronics, think about textiles. So China's exports to the United States would certainly be turned off if a future Trump administration did set tariffs at that level. What would happen to U.S. exports to China? Well, that depends on if China retaliates or not. We just heard the former president in that clip saying they didn't retaliate in his previous administration. This may surprise you guys. Take a breath. But that isn't entirely consistent with the reality of what occurred in his first administration. The U.S. set 25% tariffs. China retaliated with 25% tariffs. So if there were 60% tariffs this time around, I anticipate that China would certainly retaliate, and we'd see a serious blow to U.S. exports to China as well.
Wow. And the impact on China's economy, unquantifiable, I suspect.
Well, and our own as well, surely.
Pretty significant.
Yeah.
China is the biggest beneficiary of the existing trade relationship. The concern for Trump and his team is that it's unbalanced, so they'd be the biggest loser, but certainly no one would be better off.
All right, Tom Orlik of Bloomberg Economics, thank you so much for joining us. We appreciate your expertise. And coming up, we'll turn to someone with expertise on the Middle East. Carmiel Arbit of the Atlantic Council will join us as we're seeing tension between Biden and Prime Minister Netanyahu. This is Bloomberg.
What's happening is he has a right to defend Israel, a right to continue to pursue Hamas, but he must pay more attention to the innocent lives being lost as a consequence of the actions taken. He's hurting, in my view, he's hurting Israel more than helping Israel by making the rest of the world, it's contrary to what Israel stands for. And I think it's a big mistake.
That was President Biden on MSNBC over the weekend. Joining us now is Carmel Arbit, non-resident senior fellow at the Atlantic Council. Carmel, always great to have you on Balance of Power on Bloomberg TV and radio. President Biden went on in that interview to talk about the idea that if Israel were to move into Rafah, of course, which is on the border of Egypt and Gaza, where 1 million people have sought refuge, he called that potential move a red line. But what is a red line worth if no consequence comes with it? The U.S. isn't about to stop supporting Israel. So what did that mean?
Thanks so much for having me on. What we're seeing here is rising tensions between Biden and Netanyahu that were in some ways inevitable. You have a far right-wing government in Israel, and you have a center-left government in the United States. And so the fact that they've been able to lay aside these tensions up until this moment is actually quite remarkable. And we've seen historically U.S. presidents who have had to deal with Bibi eventually hit a breaking point. And so now what we're hearing is a shift in rhetoric from the White House, not yet a shift in actions, but rhetoric changing where they're pushing the Israelis towards a more humanitarian-centric approach and putting serious pressure on them not to go into Rafah.
That rhetoric is certainly coming from more Democrats here in Washington. Carmel, we spoke earlier today with Congressman Seth Moulton, a Democrat from Massachusetts. This is a former combat veteran. He's on the Armed Services Committee, and he spoke directly about Prime Minister Netanyahu. Let's listen to what he said.
If Netanyahu continues killing so many innocent civilians, he's going to lose the war, because he's just serving as a recruitment tool for Hamas. So the issue here is that Netanyahu fundamentally has to go. What he's doing is morally bankrupt. It's militarily bankrupt. It's not going to work. And so therefore, what he's really doing is pursuing his own interests and not Israel's.
Carmel, is the congressman right? What would happen if Benjamin Netanyahu were removed from this scenario we're in?
Yeah, I think it's important to remember that there is still wide support in Israel across the political spectrum for this war, and particularly for the necessity that Israelis feel to defeat Hamas and remove them from power. That's not a view that is unique to Bibi Netanyahu. So while Netanyahu is losing popularity, we're seeing his poll numbers continue to tank at the expense of others in his war cabinet who are more centrist, who are seen as more serious in this moment, we would still see this war continue even if Bibi weren't at the helm. Now, how they would be dealing with certain issues, whether it's the delivery of humanitarian aid or frankly the relationship with the United States, might look very different.
Sure, and on that relationship with the United States, as we saw the president announce last week that he wants a port constructed on the Gaza coast in order to expedite getting humanitarian aid in addition to the airdrops that the U.S. has already begun. The U.S. is having to go around an ally here, and regardless of whether it's a matter of who's at the top or just a kind of fractious nature of this relationship right now, are we also seeing signs that the U.S. doesn't actually have that much leverage over Israel and its decision-making when it comes to this conflict?
I think it's important to take a step back and look at whether or not it's really going through or working with. The United States has said it's going to set up this port. It's going to take about 2 months to get this up and running. And what we're looking at here is really going to be a drop in the bucket when it comes to the necessary aid for the burgeoning humanitarian crisis in Gaza. So the first piece of this is that this is not going to solve anything. It's not that the Israelis haven't done it, and therefore the U.S. is doing it or going around them. They're also going to be doing this in coordination. It's in all likelihood the Israelis are going to have to help them set this up. They're also still going to be inspecting any ships that are coming to that port. Likely they'll do that in Cyprus. So there will be continued coordination. But what we're seeing is a complete inability to deliver aid inside Gaza in any meaningful way, which is a result of this ongoing chaos in Gaza and the fact that the Israelis don't have a plan moving forward. And we've discussed this in the past. They have no means of distributing aid. Roads have been destroyed. They can't secure areas. And so there's no real way future to have a meaningful impact on this humanitarian crisis absent that ceasefire.
Yesterday was the beginning of Ramadan, Carmel. Does that mean that any chance for a ceasefire will now have to wait another month?
No, there was a lot of hope that a ceasefire would be reached before Ramadan, where Ramadan served as a deadline. And we are, of course, beginning Ramadan today. Negotiations are continuing. They are continuing to mull forward as both sides blame one another for why there hasn't been a breakthrough. But that doesn't mean that there isn't a possibility of having a ceasefire during the Ramadan holiday.
Of course, that's in the more near term. Returning to kind of the sparring back and forth via public media interviews between Biden and Netanyahu this weekend. Netanyahu also rejected Biden's call for a two-state solution to the conflict. He said Israelis resoundingly reject the attempt to ram down our throats a Palestinian state. So in the longer term, Carmel, are we any closer to a long-term endgame?
I think we're not any closer to a long-term endgame. We are getting closer to an end to the war. The Israelis have made significant inroads in terms of taking out Hamas battalions and are thinking very strategically about what the final phases of war look like. But what they are not thinking about seriously is what happens in the day after. And while Netanyahu has repeatedly said, primarily for his public constituents, that he does not support a two-state outcome, he's also feeling increasing pressure from the international community, the United States, and countries with whom he hopes to normalize relations, like the Saudis, on what a day after can and should look like. But the Israelis still aren't there yet and aren't ready to get serious about it.
Carmel, it's great to have you back. Our thanks to Carmel Arbit, non-resident senior fellow at the Atlantic Council. Coming up, the Biden campaign has a new ad out that takes on the president's age.
Can we do one more take? Look, I'm very young, energetic, and handsome. What the hell am I doing this for?
We'll bring in our panel next. Rick Davis and Jeannie Shanzane are with us, coming up on Balance of Power on Bloomberg TV and radio.
Look, I'm not a young guy. That's no secret. But here's the deal. I understand how to get things done for the American people. Donald Trump believes the job of the president is to take care of Donald Trump. I believe the job of the president is to fight for you.
A new ad out by the Biden campaign addressing persistent concerns over his age, while a super PAC supporting Donald Trump came out with its own ad taking a slightly different tack on the president's age.
We can all see Joe Biden's weakness. If Biden wins, can he even survive till 2029? The real question is, can we?
As we assemble our political panel now for their take on this, Rick Davis, partner at Stone Court Capital, is with us. Jeannie Shanzano, political science professor at Iona University. Great to have you both here. Jeannie, that's a $30 million ad buy for Joe Biden. He's trying to tackle the issue head on. Is it smart to own it, or is he simply reminding people about his greatest weakness?
Yeah, it's smart to own it. It is one of his greatest weaknesses, as you mentioned, and he's got to tackle it straight on. And he's got to make the case that he made at the State of the Union, that we saw him make on the late night show, and that he is trying to make out on the trail in the last few days, which is that with age comes experience, comes wisdom, and the ability to get things done, and to remind voters that there are worse things than being old. You could be crazy or dangerous, and that is what we are going to walk into, a message of I may be old, but I'm not crazy and dangerous, and that's where we're headed. So it's going to be a long, ugly campaign. Can see it coming forward.
Indeed, and we have about 8 months of that to look forward to. So Jeannie says you got to face it head on, Rick, but is there such a thing as leaning too hard into the whole I'm old thing?
Yeah, it's an art form, right? We've heard him make fun of himself, and that's sort of a nice way to deflect it. He did it effectively in the State of the Union. I think that this is all part of a regular campaign plan, though. His problem is with young voters, voters of color, especially those without college education, Trump, Biden swing voters, those who voted for Trump in 16, voted for Biden in 20. These are people who he has to have in order to win, right? This is not even like making up new ground from 2020. This is, if you're going to win, you have to have these back into your coalition. And the one thing that they scream out loud is that he's old and they're not ready to vote for someone his age. So he's got to get his own coalition back, and that's what this buy is. This buy is targeted toward them. Who buys Comedy Central if you don't have a young person issue? Who buys ESPN and March Madness if you don't have working class people who have, time to spend watching sports? So the bottom line is, I think he's trying to shore up his campaign right now. And they placed a bet. They knew they were going to do this right after the State of the Union, and they got what they wanted. They got, over 30 million people watching the State of the Union, a good performance by Joe Biden. Can they keep this momentum going through this ad campaign, and will it continue to keep soliciting funds into the campaign like they were able to report an extra $10 million, overnight after the State of the Union?
I find it fascinating, Rick, Jeannie, and Kaylee, that the Trump and Biden campaigns are both on TikTok now, right? But they are now both, I guess, supporting potentially banning TikTok. It gets a little more complicated with Donald Trump. You have to listen to what he said earlier today on CNBC, because we all remember he was for a TikTok ban at one point, and he seems to have changed his tune. Here's what he said.
I could have banned TikTok. I had it banned just about. I could have gotten it done. But I said, you know what? But I'll leave it up to you. I didn't push them too hard because, let them do their own research and development. And they decided not to do it. But as you know, I was at the point where I could have gotten it done if I wanted to. I sort of said, you guys decide. You make that decision, because it's a tough decision to make.
He wrote on Truth Social, if you get rid of TikTok, Facebook and Zuckerschmuck will double their business, referring to Mark Zuckerberg here, of course. It turns out that Donald Trump recently met with Jeff Yass, a hedge fund manager, big Republican donor, who has a massive stake in TikTok. And it turns out as well that Kellyanne Conway is working for the Club for Growth, which is now a big financial backer, I guess, or Jeff Yass is of the Club for Growth. I'm trying to get all of the dots connected here, Rick. Is this why we're seeing Donald Trump change his tune? Because this is up for a vote on Wednesday in the House.
Yeah, I loved his tune. This is a really hard decision. I'll let somebody else make that decision.
Yeah.
I mean, so far the buck does not stop on his desk. Yeah, look, I think this is hard because it's kind of the old theory of bank robbers. Why do they go to the banks? Because that's where the money is. Why do you go to TikTok? Because that's where the eyeballs are. And so you can't really fault the campaigns for going where people are. And I think that then that has to inform their decision-making when it comes to the policy. I think Biden's pretty clear about this. They don't want the Communist Party getting access to data about people who are on TikTok, and so there has to be a break. Donald Trump, you know, it's a little more complicated as you played in that tape as to what his position is. But the bottom line is, I don't think anybody is going to withstand the pressure domestically right now of pushing back against the CCP. Chinese Communist Party should not have access to our data, and there ought to be a way to circumvent that with TikTok and Binance.
Well, and in fact, there's a whole committee now in the House of Representatives dedicated to the strategic competition between the Chinese Communist Party and the U.S. And we actually spoke with a member of that committee earlier today on Balance of Power. Congressman Seth Moulton, a Democrat from Massachusetts, gave us his view on this TikTok bill.
I hope it gets a vote. I think that we don't need the Chinese Communist Party telling our kids what to watch online, which is essentially what's going on here. And I just want to see TikTok survive and thrive, but under American protections, in American hands.
And Jeannie, he made a point to make it clear to us that this is a bill that would require ByteDance, the Chinese owner of TikTok, to divest it, not a bill just to outright ban TikTok. That would be the consequence if that divestiture doesn't happen. So this will get a vote in the House on Wednesday. President Biden says he'll sign it if Congress passes it. Do you actually believe they will? Will this happen?
You know, there's so many factors. I think it may get a vote by Wednesday when they leave. With Donald Trump sort of iffy on this now, I wonder how much sway he will have. He is clearly not forgiven Mark Zuckerberg for what he saw as interference in the 2020 election. Beyond that, though, I think there are real questions whether this passes the Senate. And I, look at Mark Warner and others who say, number one, does it make sense for the U.S. government to be targeting one company? But even more than that, and I have real questions about the issue of privacy and regulation. TikTok is by no means the only way that our private information is getting into the hands of people around the world. And so it is a talking point to say you are really going strong on the CCP. But the reality is, and there's so much research out there about this, it is getting out in other ways. So if they want to do a comprehensive protection of our privacy, they should go ahead and do that. But for my money, to do just one company is to do a talking point that yields very little in the end for our protection and security, and that is troubling to me.
And of course, the campaigns will have to figure out how they're going to reach young voters if they don't have this platform. Jeannie Shanzano and Rick Davis, our political panel, will be sticking with us because coming up, we have to talk about Senator Katie Britt, the Republican from Alabama who gave the response to the State of the Union, is now having to respond to backlash over that speech she gave on Thursday night. We'll have more on that next. This is Balance of Power on Bloomberg TV and Radio.
very specifically said, this is what President Biden did during his first 100 days. Minutes after coming into office, he stopped all deportations, he halted construction of the border wall, and he said, I am going to give amnesty to millions. Those types of things act as a magnet to have more and more people here. I then said in his first 100 days, he had 94 executive actions, and those executive actions didn't just create the crisis, they invited it.
That was Republican Senator Katie Britt of Alabama addressing her response to Biden's State of the Union on Fox yesterday. Joining us now, our political panel, Rick Davis, partner at Stone Court Capital, and Jeannie Shanzano, political science professor at Iona University. And Rick, something else she has started to get criticism for is the fact that a story she told, a graphic story, frankly, in that speech about a woman who was trafficked and gang raped. That woman she met with apparently was not trafficked in the United States, and the years in which she was held in captivity were 2004 to 2008, when George W. Bush was president. It just didn't happen during the Biden administration. Does that invalidate the arguments she was trying to make? How politically damaging is that for her?
Yeah, I think without that story, we wouldn't be talking about anything other than kind of the presentation. And it would be a Saturday Night Live joke, and we'd all be laughing about it. But in this case, it's actually a pretty gross misrepresentation. And I can see how writers of the speech thought that this would be dramatic and this would be something that she could punch through, and it would scare people because so much of the immigration messaging is fear-mongering. But they just overshot their runway. I mean, this was not something that would stand up to the light of day. Nobody was in the room, I guess, who said, oh, wait a minute, this happened in 2004 to 2006. Aren't we going to bring, criticism onto ourselves by doing something that old? It has nothing to do with the first 100 days of the election. As you heard, Katie Britt did a very nice job articulating the first 100 days and the disaster that was the Biden administration decision on immigration. But this had nothing to do with that.
Carla Jacinto is the woman's name, Jeannie. She also said she met the senator at an event at the southern border with other government officials as opposed to one-on-one, as Britt stated. She suggested some things and stated others here. It does make you wonder what's going to happen to Katie Britt following this little implosion in the Republican response. Does this damage her career politically?
I don't think it will potentially long term. Just to add to the issue of the victim, she also said she does not speak to politicians, neither in Mexico nor the United States. She was shocked that she was used in this way and that it has inflicted damage on her. So all of these things you need to take seriously. In terms of Britt, I think, and to a certain extent, with all the focus on the presentation, this has been given a little bit of a pass, because the reality is this speech was not hoisted on her. She sat there. She said, I spoke to this woman. This was our interchange. This was our experience. I appreciate hearing that, somebody in the room should have stopped and said, wait a minute, what about the senator from Alabama herself? Do you actually get on national TV and say you had a conversation that you did not have and pretend it occurred when it did not happen? So that is troubling. And, the other part of this is, if they are saying that the disaster at the border is something that needs to be addressed, then surely there is a real story to be told. Why not tell that story? So this really diminishes their entire argument about the need to address the border. So from all of those perspectives, this is really troubling for the GOP as it pertains to immigration. Long term, I think the senator will survive this. But short term, if there is a real disaster at the border, and I believe there are stories to tell that aren't based on lies, fabrication, and hurting the victims of sex trafficking.
And Rick, finally, to Jeannie's point about Senator Britt is a young senator. She's 42 years old. She's only 14 months into her term right now. And frankly, the likely Republican nominee has been caught in lies on several occasions, and it hasn't damaged his political popularity. So does this hurt her trajectory in her political career?
Probably not. I mean, you got to remember the kind of communication that Republicans listen to. It's not MSNBC and CNN. It's Fox News, Breitbart, and, Newsmax. So those won't beat her up over this speech. They'll laud it and say that she did a great job. We live in two Americas right now. The Republican America that has different news cycles or news sources than the Democrats do. And so, yeah, we're going to go along on a parallel scale.
Rick, thanks as always. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, getting us started on this Monday on Balance of Power. Check out the Washington Edition newsletter for the stories we've been talking about. Find it on the terminal and online.
Thank you so much for joining us here on Balance of Power. We'll see you back here tomorrow on Bloomberg TV and radio.